Oliver Slope joins us now, and he is with Blue Line Futures in Chicago. And Oliver, a lot of excitement, mainly being led by the wheat market today. Did you see that one coming?
A whole lot of excitement, which is very nice to see. A lot of times between Thanksgiving and the New Year, you start to see the volatility come out of the markets, and that's not what we're getting here this year. Obviously, the trade headlines dominating things, and as you'd mentioned, some weather forecasts helping wheat really get some legs underneath it. And I think a lot of this momentum that we're seeing in the grain markets is really just broad-based buying on renewed optimism on the trade front, and that spurred a lot of short covering from the funds. Looking at Friday's Commitment of Traders report, we see the funds still short about 115,000 contracts for corn. Beans are short about 115,000 contracts as well. So this positive news has started to kind of create a rush for the exit, so to speak, for those funds to buy back those positions, which has put some premium into the market. Now, we are well off of the lows from just last week, so temper the expectations here. There's still quite a bit of uncertainty. There's no date for this trade deal to be signed yet. And once they sign it, it needs to be implemented. So still a lot of big question marks out there here going into the end of the year.
All right, what about globally? When you look at outside supplies of corn, wheat, and soybeans outside the U.S., are they finally running down to where it will mean buyers have to come back to us?
Well, that's certainly what we've been talking about over the past month or so with regards to corn. We've been talking about demand being really a thorn in the side for the bull camp, and talking about turning that over in the turn of the year, which is kind of a seasonality thing that we're looking at. And I wouldn't be surprised to see that add a little bit of fuel to the fire here for that corn market specifically. Hopefully we're able to get out above some of these technical resistance levels. 390 is a big line in the sand for us. If we're able to achieve consecutive closes out above here, I really wouldn't be surprised to see that trigger additional short covering from the funds. And from the next level that we're looking at, obviously $4 psychologically significant, but the technically significant area doesn't come in until about 407 to 411, which is a 200-day moving average and a key retracement.
Important points to watch. Thanks for spelling that out. We'll come back in a moment and we'll take a look at our cattle and hog markets on the other side.